The hidden cost of homeownership is not your mortgage, your taxes, or even your insurance. It is the $21,400 you never budgeted for. You signed the papers, you got the keys, and you genuinely believed the monthly payment was the number that mattered. Nobody at the closing table handed you a second sheet that listed what the house would quietly demand every single year after that. The mortgage is the visible cost, the one that gets the credit, the one that gets the conversation, the one everybody prepares for. But there are 7 other cost categories running underneath that number right now, and most homeowners cannot name even 3 of them. By the end of this video, you will be able to name all 7, calculate your exact exposure, and install a system that stops the bleeding permanently. The hidden cost of homeownership starts with maintenance, and the real number is not what most home improvement content will tell you. The accepted industry rule is 1% of your home's purchase price per year. On a $340,000 home, that is $3,400 every single year, minimum. But that 1% rule assumes a home in average condition with no deferred repairs. Most resale homes carry between $6,000 and $9,000 in deferred work at purchase. That deferred stack does not disappear because you signed the deed. It simply transfers to your bank account as a series of future emergencies. The second hidden layer is property tax escalation. Most buyers lock in a rate at closing and mentally treat it as a fixed, permanent number forever. But property taxes in the United States increased an average of 4.1% per year between 2019 and 2023, compounding on a base the buyer never modeled. On a $340,000 home, that escalation alone adds between $600 and $900 to your annual housing cost by year 3 without a single lifestyle change on your part. The third layer is HOA fees. 74% of newly built homes in America sold between 2020 and 2023 came attached to a homeowners association with mandatory dues. The average HOA fee in 2024 is $191 per month, but the standard HOA agreement allows fee increases of up to 20% annually without a homeowner vote. That means a buyer who modeled $191 per month at purchase could legally be paying $275 per month by year 3 with no warning and no recourse. The fourth layer is homeowners insurance premium drift. The average premium increased 19.8% nationally in 2023 alone, driven by climate risk repricing. A buyer who locked in $1,200 per year in 2021 is statistically paying over $1,700 now, a $500 annual increase that hit every budget with no behavioral trigger. The reason these costs compound invisibly is a cognitive error called purchase price anchoring. The brain assigns permanence to the number it saw at the moment of decision. Once your mind has locked on to the mortgage payment as the definition of what this house costs, every subsequent charge gets mentally filed as a temporary exception. The furnace repair in March is a one-time thing, except the water heater goes in June and the roof needs work by October and the driveway is next spring. Each individual expense feels isolated because your brain is comparing it to the last emergency, not adding it to a running hidden cost of homeownership total. This is how 63% of homeowners in a 2023 Federal Reserve survey reported being surprised by housing costs within the first 2 years of purchase. Surprised, not just inconvenienced, meaning the cost was genuinely outside the mental model they built when they decided to buy. The buy now, pay later architecture of home financing amplifies this distortion by separating the decision moment from the cost delivery moment by months or years. You said yes to the house in one emotional state, one financial snapshot, one salary, but the house charges you in a completely different economic environment. The lender modeled your debt-to-income ratio at a fixed cost. They had no legal or practical obligation to show you the full 10-year carrying cost of the asset. Real estate agents are compensated on transaction completion, not on your financial outcomes in years 2 through 7 of ownership. Let us build the actual hidden cost of homeownership breakdown for a $340,000 home purchased in 2022, because the specific numbers are what makes this real. Baseline maintenance at 1% annually is $3,400, but we'll use the realistic deferred repair adjusted figure of $5,200 based on average resale condition data. Property tax at the national average of 1.1% of assessed value is $3,740 per year. Escalating at 4.1% annually, that becomes $4,279 by year 3 without a single lifestyle change on your part. Homeowners insurance at the national average 2024 premium for a $340,000 home sits at $1,979 per year after the 2022 to 2024 escalation cycle is applied. HOA dues at the national average of $191 per month total $2,292 per year, escalating at 10% annually. That's $2,521 by year 2. Utilities in an owned home average $4,886 per year nationally, according to the 2023 American Housing Survey. Renters almost never model this number before purchasing. The reason renters don't model it is because most rental agreements bundle or obscure utility exposure. Ownership strips that buffer and hands you the full raw number. Lawn care, pest control, gutter cleaning, and exterior maintenance average $1,847 per year nationally for a home in the 1,800 to 2,400 square foot range. Appliance replacement amortized across expected lifespans, refrigerator, dishwasher, HVAC, water heater, adds a real $1,200 to $1,600 to your honest budget. Add those 6 categories together and you arrive at $19,400 to $21,400 per year in non-mortgage housing costs. That's the number in the title, and it's conservative. That number means a homeowner with an $1,885 monthly mortgage is actually spending the equivalent of $3,628 to $3,783 per month to occupy that house. If you're carrying any buy now, pay later debt from a furniture or appliance purchase after move-in, that $21,400 figure is not your ceiling, it's your floor. The buy now, pay later stack that most new homeowners build in the first 90 days, couch, bed frame, washer, dryer, dining set, averages $6,400 in deferred principal. At a typical buy now, pay later deferred interest rate of 26.99%, triggered by a single missed or late payment, that $6,400 becomes $8,125 within 18 months of purchase. The fix for the hidden cost of homeownership is not a spreadsheet you fill out once. It's a physical architecture that makes the full cost visible every single month. Step 1 is what Joseph calls the true housing number, a single monthly figure that adds every non-mortgage cost together and puts it on the same line as the mortgage. You are not allowed to treat these as separate categories. They are one cost, and the true housing number forces your brain to price the house honestly and permanently. For the $340,000 example above, the true housing number is $3,628 minimum. That's the figure you defend your budget against, not the $1,850 mortgage payment alone. Step 2 is the Deferred Repair Fund, a separate savings account physically named Deferred Repair, receiving a fixed transfer of $433 every single month without exception. That $433 monthly transfer is the $5,200 annual maintenance reality expressed as a predictable monthly charge. It eliminates the emergency framing that wrecks budgets. The moment a repair bill arrives, you are not surprised. You are not going to buy now, pay later to cover it. You already have the money in the account named for it. Step 3 is the annual escalation audit. Every January, before any other financial review, pull the exact current figures for your property tax, insurance premium, and HOA dues. Compare each to the prior year and update your true housing number immediately. This turns a passive, invisible cost escalation into an active, visible, manageable decision point. These 3 steps do not require a financial advisor, a new bank account type, or a single piece of software. They require a decision made once and a system built once. Open your bank app right now and find the most recent payment for each of these 7 categories: maintenance, tax, insurance, HOA, utilities, lawn and exterior, and appliances. If you can't find a payment for a category, that's not evidence the cost doesn't exist. It's evidence the cost hasn't hit you yet, and it will. Write the annual total for every category you can document on a single piece of paper. Physical paper, not a note app, because the physicality creates a commitment the phone does not. Add those totals together and write the sum at the bottom with a circle around it. That circled number is your real hidden cost of homeownership for this year. Now, divide that circled number by 12 and write that monthly figure next to your mortgage payment. Look at both numbers together for a full 10 seconds before doing anything else. If the monthly hidden cost number is larger than your mortgage payment, you are in the statistically normal category. Don't panic, but don't look away from it either. Now, go to your bank and open a secondary savings account. Name it exactly Deferred Repair, because the name of the account is part of the behavioral architecture, not a decoration. Set a recurring transfer for the first day of every month into that account equal to your annual maintenance estimate divided by 12. Automate it before you leave the app. Pull your homeowner's insurance declaration page and find the renewal date. Set a calendar alert 45 days before that date to shop 3 competing quotes before auto-renewing. The average homeowner who shops their homeowner's insurance every 2 years saves between $340 and $680 annually. That one annual habit partially offsets the premium escalation trend. If you are carrying any buy now, pay later balance from a post-move-in purchase, list every open BNPL account, the exact balance, and the exact deferred interest trigger date for each. Any BNPL account whose deferred interest trigger date is within 90 days must be paid in full before that date. Prioritize those above every other discretionary category without exception. The hidden cost of homeownership is not a problem created by bad luck or a bad market. It is a problem created by incomplete information accepted at the moment of maximum emotional commitment. Nobody has ever walked into a closing feeling financially calm. The excitement, the pride, the relief of getting approved all work against the cold arithmetic that should follow. The lender, the agent, and the title company all had financial incentives for you to focus on the mortgage number and feel good enough to sign. Your long-term carrying costs were not their calculation to make. That does not make them villains. It makes the responsibility yours permanently and without exception to build the complete cost picture the transaction never gave you. A house is not a purchase. It is a 30-year operating contract with variable costs, escalating obligations, and zero ability to cancel when the terms become inconvenient. Once you reframe the house as an operating contract instead of a purchase, the true housing number becomes the only honest way to evaluate whether you can actually afford it. Every dollar you do not assign to the deferred repair fund today will reappear as an emergency bill at the exact worst financial moment. That is not pessimism, that is the documented repair cycle of physical structures. Go add up every non-mortgage housing cost you paid in the last 12 months and post the total in the comments. The number will likely shock you, and it will definitely help someone else who is about to buy. If you are carrying any buy now, pay later debt from a post-move-in furniture or appliance stack, the next video shows you exactly how that deferred interest architecture was designed to trigger at the moment you are least able to pay. Every system in that video is physical, specific, and takes under 20 minutes to install. The same framework that worked for the hidden cost of homeownership works identically there. That video is already on your screen. Watch it before that deferred interest trigger date gets any closer.